So today I'm going to be talking about a couple of stocks that I think might be interesting trades to hold just for a short period of time whilst earnings are about to be announced. The first stock that we're going to talk about is NIO. It's a Chinese electric vehicle manufacturer that specializes in luxury and high quality vehicles, mainly in SUVs and sedans. And they have quite a interesting backstory. The company was one of the first creators of efficient batteries before they became a car manufacturer. Unlike most car manufacturers that have gone the other way and installed batteries into their cars, this was a company that was actually specializing in battery technology. And they have quite a lot of recognition in the market for being the leaders in the space when it comes to battery technologies, having some of the longest ranges, they have created one of the world's fastest electric vehicles as well, and they are one of the only electric vehicle manufacturers that provides a battery as a service model, which means that when you buy a NIO car, you are not buying an old battery. You actually, when you go in for a service, they swap out your battery, which gives them quite a unique selling point and advantage. NIO has had struggles along the way. It's got a mix of positive and negative fundamentals behind the company, whereby they're not currently making money. However, they are forecast to be making money in the near future. So let's go and have a look at some of the details about NIO before we talk about why this might be an interesting investment or an interesting trade for you. First of all, it's important to highlight the fact that this is not a profitable company. This company is losing money and it has not yet become profitable. However, that is not something abnormal. Tesla was unprofitable for many, many years. It's very common with vehicle manufacturers and electric vehicle manufacturers that have to build their brand, build their market, that they will be unprofitable for a significant period of time. However, we are seeing from the forecast data that they are due to become profitable in 2027. So that is very positive. Typically, when we look at a company, we want to be looking for companies that are profitable. However, companies that are not profitable but are due to become profitable can provide some outsized gains as they suddenly go on the radar of investors that will invest into profitable businesses. So this is where you can sometimes take advantage of very high upside in this period where a company is transitioning into profitability. The future growth forecasts compared to the industry and the market are also strong for NIO. If we look here, then it looks like analysts' forecasts are forecasting that 2027, 2028 is where we would see a good earnings per share growth. The ownership of the company is quite well diversified between institutions, state and government, and the general public, which is a good sign because when institutions are in an investment, typically that means they've done their due diligence and it is a company that should stand the test of time. So the main reason that I am suggesting you may want to consider adding NIO as a speculative trade, not necessarily an investment for the long term. It could be a good investment for the long term. If you're willing to wait 3, 4, 5 years and expect the company to meet its goals of profitability. However, the reason that I am looking at this is because of what is about to happen, which is the earnings call that is coming up in a few days. We could see a surprise to what analysts have estimated and what the company has forecasted for the stock. We've seen that they've reported very strong sales on the Envo model, which is a new model, and also on Firefly, and they're getting good customer feedback, which should improve the sales projections for 2025. So not only could we see a beat on what was forecast, we might even see a more bullish sentiment coming from the company for the next forecast, and therefore we see that there's a good potential this could lead to a short-term bounce in the stock price. NIO's stock price is trading at a forward PS ratio of 0.68 compared to more than 12 for Tesla. So that indicates that there's a lot of room for movement to the upside within the PS ratio. So if we go and have a look at what's going on here, this is where I see a great opportunity. We've got a stock which is trading at a price pretty much as its IPO price of 2018. However, since then, they have solidified their market. They are expanding into Europe. They do have quite unique offerings for their products. Now, if we look at these two earnings in the past, where they've had good earnings reports here and here, this led to quite a significant run up in the stock price. And this is what I believe could happen again if they do beat their forecast as expected. However, I feel that the downside is relatively limited if they don't achieve the beat on their forecasts. So here is where we see absolute baseline value for NIO. And that would be, in the worst case scenario, we could look at a drop of up to, let's say, 18%, but that would require some terrible news. And considering we're expecting quite positive news, therefore I would think that the downside is considerably limited. However, the upside, if we look at when we had a strong earnings report here, that took us up 130% in 56 days. And here in September, when we had a strong earnings report, we had a rally of 102% in 27 days. So I think this is primed for a good earnings report and potentially a nice jump, which could see, you know, in the region of 77 to maybe 150% upside, depending on the data. Again, this is more of a speculative trade that I am recommending. It's not necessarily a value investment because the company is not profitable at the moment and the sector is competitive. Although NIO does stand out in the sector, I'm not sure how comfortable I am owning unprofitable companies over the long term. If you like the narrative and the story, you might want to buy it as a long-term investment because there is potential here. But for me, this would be a short-term trade to take advantage of the earnings call and try and make a quick 30-40%. If the earnings call is good. If the earnings call is not so good, I would drop the stock and go elsewhere.